Our next guest is urging caution on being too bearish. Joining us now, China Beige Book CEO Leland Miller. Leland, this is a pretty contrarian take relative to what we've heard across the street in recent weeks. What gives you confidence that the sentiment is too bearish at this point in time?
Well, the key word is relative. And I think relatively speaking, people are too bearish because all we're hearing about is collapse. Chinese government, hard landing is coming. The collapse is here. None of this is actually true. I mean, you have some very, very bad data that are coming out right now for different reasons. I think that, you have the pathetic recovery that happened. It was a recovery, but it was a pathetic one in the second quarter with retail and services. And then you have this property dynamic that's scaring everybody because the shadow banks look like they're under siege. So all this bad news, everyone's saying, it's going to pop, it's going to pop. But that's not the way Chinese financial system works.
Yeah, I think you bring up a really good point because investors in China have gotten used to effectively a moral hazard, just overall support from the Chinese government wherever there's a pocket of distress. And that's a key point that people are bringing up, that this time around there hasn't been that, huge stimulus push to fix some of the holes that they're seeing. And they're worried that that may not ultimately come. What do you think ultimately transpires with regard to the Beijing response here?
I think what we're seeing in property and the shadow banking system is happening because Beijing wants it to happen. Several years ago, we, among others, were talking about how the Chinese government is moving actively to deflate the property bubble. Well, guess what? That's not pretty. It's going to be ugly. It's going to be painful. So that's what's actually happening right now. China can control this because it has a non-commercial financial system, which means it controls the counterparties in the country. It controls the lenders and the suppliers and the borrowers and both sides of cash flow and both sides of other transactions. So China is allowing this to happen because it thinks that it is necessary for debt sustainability in the long run. That doesn't mean things are good. It just means we're not on the verge of collapse.
How do you see that kind of controlled deflation taking place? I've seen some commentary about investors saying, we know what this would look like if it were taking place in the U.S. We know what would come from this and how to trade it. But in China, things are a little bit different. We haven't seen such a deflation in many, many decades in that region. So what would you say to investors who are trying to figure out exactly kind of the next move on the chessboard?
Well, 2 years ago, we came up with the analogy that they want to cull the herd, then when things get too bad, they ventilate the system. Cull the herd, ventilate. That's exactly what we've been seeing this year and the last year and the year before that, is Beijing stepping in. They need to make sure that the system takes out the weak players, is less reliant on endless credit being pumped in the system, but also doesn't take out the stronger players, doesn't freeze up cash flow. So, they make a big move like they're making right now. And then when things get too bad, they step in with some support, not to juice the system, not because this is going to be some sort of game changer and go the other direction, but because they want to stabilize the system, make sure they're not wrecking property across the board. It's a painful process, and I think people are just getting too panicked about it.
Hey, Leland, meantime, the Journal, such a great piece about the economy there, where they argue that Xi and his lieutenants, and I'm quoting partially here, remain suspicious of U.S.-style consumption because they think it's wasted time when they should be girding for potential conflicts with the West. Does that sound thematically true?
Yeah, I think that's right. I mean, the big question that every China watcher that I speak to has is, why have they not done more on the household side, on the consumer side? So when you see stimulus in China, it's always on the supply side. It's always pumping, more capital into production. It's never supporting households. It's never supporting the consumer. Right now, you've got very weak consumption. You've got very low confidence. They probably would be very justified to put in some sort of consumer stimulus, but there seems to be a dogmatic mental wall against doing that. So I can justify what they're doing on the property side as being useful. I think what they're doing in terms of consumption is quite mysterious.